Hello and welcome to the Wendell Effect for India for the 14th of May, or the week of 14th of May, 2023. Just a quick reminder, this is Brandon Wendell with you. We are not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving you personalized recommendations. There is always risk of loss in the markets. Nothing we can do can eliminate that. All we can do is simply try to minimize the risk with the actions we take. And keep in mind that we are not subject to trading restrictions. So we get a position of security, initiate one at any time, and past performance is no indication of future results. So stay in touch with me, please. You can go ahead and email me at brandonwendell.cmt@gmail.com. That way you can send in requests if there's something you'd like me to look at in particular, any questions you might have about our analysis here or about the markets in general. You can go ahead and send those questions in there. Also, you can find me on Twitter. I do tweet about the Indian markets as well and put out some information throughout the week. And please, if you could hit like and subscribe. You can even hit the alerts button to make sure you get notified when we put out new videos. It really helps us out a lot, so I appreciate that. So, looking at last month, everything was relatively green with a few exceptions. We're entering a period of time where the Nifty goes a little bit sideways but slightly bullish, and I'll show you that in a bit as well. Last week we pretty much had the same picture. It didn't really change much. You look at the last month versus the last week, the only thing that changes is it's not quite as bullish as it has been, and, well, we'll see what's going on with the markets there. Looking at the seasonality for May, you can see that half the time it goes up, half the time it goes down. It's kind of a toss-up, and overall the annualized return is pretty good. Usually you get at least about 1.75% rate of return on the average move during the month of May. But the beginning of the month tends to start off a little slow, and now that we're near the end of the month, we should start to see a little bit of a rally potentially. And that's what I'm seeing here. You see on 1st of May to 14th of May, not so good. It goes down a little bit, but the end of May usually rallies. On this weekly chart, I talked about this a couple weeks ago on the 30th, where we had a possible head and shoulders forming, but this right shoulder keeps going, and right now we're at a crossroads. If the right shoulder takes the RSI above 60, then it's probably not a right shoulder. We might even continue to move to the upside. But if we end up staying and closing below 60 again on this week and putting in a high from last week, so again, we got a new candle starting this week here. But if that becomes a high that's below 60, then this would be a head and shoulders and most likely to break down. But when you look at the daily chart, remember a couple weeks ago I mentioned we had an inverted head and shoulders. Well, sure enough, we broke to the upside last week. And not only did we break last week, but we actually have more momentum. So this is actually suggesting that we are going to continue to move to the upside. Remember, the second half of May is typically very bullish for the Nifty. So I'm actually expecting us to continue upwards to the measured moves that we were talking about for the Nifty. The measured move would be 18,870. So we actually have the potential to continue to rise this week, even though it looked on the weekly it was going to turn down, because we made it through that bearish time of May with actually moving upwards or even just a bit sideways. We're likely to keep going up at this point. And, well, I'm sorry, that was the previous one. There you see the follow through. We started moving up and ended up hitting our highs. Now we're getting a little bit of divergence, so I wouldn't be surprised to see a little pullback before we go higher. But that's great. That gives you an opportunity to buy the pullback, and that's what I would look for. You can see on the 4-hour chart the divergence is showing there quite a bit. We've already pulled back 23%, but this may not be done. We might pull back a little more, but I'm looking at that as a buying opportunity, though. So as long as we hold above 50 on the RSI on the pullback, which you can see we did before right here, we should get a nice rally out of that. Looking at Reliance is not necessarily going to be the strongest security, but it does look pretty bullish. You can see we're making new highs both in price and the indicator. Pulled back just slightly. Originally, I was looking at this as a retracement from the downward move, but now it looks as though we're just reversing trend. And the reason why I say that is we had a positive divergence here where prices moved down, indicator moved up, showing that we lost bearish momentum, and we actually put in a low right here above 40, which is bullish. So here you can see I have the extensions. We already made it past the first target. We'll probably end up right up at this supply 2550 area by the end of this week. So look for some bullishness here. If we do pull back, well, we could retreat just under 2400. There's your demand zone that I would eyeball. But it looks as though the Reliance is going to move up. TCS also looking pretty bullish. You can see it actually signaled reversal. We had lower low in price, higher low on the indicator going into the earnings. We couldn't breach the prior low with momentum. That is a bullish divergence, and as you see, prices rallied from that area. Not only did it do that, but it actually confirmed a reversal trend by putting in a low after the divergence with the RSI well above 40. So it looks as though we're just getting a small pullback right now, but should be shooting upwards for the remainder of the week. So look for prices to continue to push up. Next target up is actually 33.30 and then 34.27. On Infosys, this is looking a little bit different. This is a little more bearish. As you can see, we retreated from our lows after the earnings and didn't really go very far. We only retreated 38%. It looks as though we may continue to push down. And unfortunately, even if the Nifty is bullish, this is not likely to partake. And it looks as though we should push down to 1182. But with the bullishness of the market, we may just go sideways as we did last week. HDFC Bank, also looking a bit bullish. You can see we tried to make a new high. We didn't have the momentum, so we fell down a little bit. But as we fell, we didn't go below bearish measurements on the momentum, so we ended up bouncing. Well, we're still struggling to make a new high. As you can see, we can't get back up above 60. So unfortunately, unless we do that, if we get above 60 on the RSI, expect us to shoot up towards the 1750 area. If not, and this is more likely, we're just going to be kind of choppy between 1640 and 1682, just bouncing back and forth through this week. On ICICI Bank, this has been extremely bullish. As you can see, we had a small retracement. Well, not so small. It's a pretty good retracement, but we already stalled at our first target. We are still marching upwards. It's going to be a slow move, but it is going to be consistent, pushing up towards the 968 target. So look for opportunities to buy on any kind of pullback that you might get. And looking at the Nifty Bank, if you take a look at the end of the month, historically slightly bullish, but not a big return. So the Bank Nifty might be a little bit sideways and choppy for the next upcoming week here. You know, you take a look from the 23rd of May to the 31st of May. So again, looking for the next week, not so great, just sideways. By the end of the month, though, very bullish. 90% of the time for the last 10 years, we had almost a 4% rate of return. So we might have to wait out this week before we get that rally next week. Well, looking at the weekly chart here on the Bank Nifty, you can see that we're coming up to the prior high, but we don't have nearly as much momentum as we had before. That's a divergence, which usually leads to a pullback. As I said, this week could be a little sideways, a little choppy, maybe even pull back a little bit. Wait for the pullback and then look to buy. Same thing on the daily. You can see we're stalling before we reach our first projection on that impulse correction impulse. So we're stalling out with a divergence. That should pull us back. I don't know if we're going to go as low as 42,136, but it definitely could. That is the next real demand area. Or we may just go back to about 42,800. But expect a pullback before we go higher. And looking at the 4 hour, you can see we actually do have demand right there. That 32% retracement I was just mentioning here on the daily, kind of fine tuning it. There's actually a little demand right there. 187 to 41,962. So with the divergence, I expect a pullback to that demand, which lines up with the 38% retracement, setting us up for the rally to the end of the month. So we're going to do a little follow-up on some of the trade ideas I put out prior to this on Mahindra & Mahindra, M&M. Basically, this was bullish. Unfortunately, never let us in. So we got to cancel that trade because we're probably going to continue to move up into the target without pulling back. Same thing with the HDFC Bank. This is not HDFC Bank, but HDFC. And you can see with earnings, we pulled back, but not enough to let us in. Just gave that little pullback before moving up. So unfortunately, neither one of those trades is going to come into play. As well as Bajaj Finance, it continued to show a lot of strength and never let us in by pulling back to our demand. You know, sometimes we plan out trades and they just can't be taken. It's the way it happens. It's too strong. Yeah, same thing with Hindustan Unilever, another one. You know, we created this little double bottom right here and rallied from it, but it just didn't get into our demand zone to let us in. Anyway, we have a couple new trade ideas. Hopefully these will pull back into our entry. We got Maruti Suzuki, which 90% of the time from the 15th of May till June 9th has rallied over the last 10 years. 90% of the time. As a matter of fact, hang on a second. We got this in the wrong spot here. You can see if I move this down and over a little bit, there you go. The past 10 years, average return has been about 5.61% on that rally from the 15th to the 9th. So let's take a look at the chart. If we can get a pullback, and I don't know if we will, but if we can get a pullback, we've got this nice demand zone. Look at that, rally, base, rally at 87.96 to 87.15. Put the stop maybe at 8,700, and you got a couple targets here as projections, 93.58 as well as 97.06. Now, if we don't pull back that much, this is not really a great demand, but you got rally, base, rally right there. That may become, excuse me, a little bit of demand around 91.80 as a possible entry as well. So keep an eye out for that. Nestle India, we looked at this once before, didn't come into play, unfortunately, but now, just for the end of May 15th to June 1st, 90% of the time, you get 3.87% return over the last 10 years on Nestle India. So again, we are sideways in motion. If we can get a pullback to this area of demand, 207.09, 203.08, I would look to buy there, maybe a retest of the highs, if not a breakout for your two targets. The other alternative is we may just break out of the sideways motion upwards. And if that's the case, actually, let's go take a look at that in the live chart. So here we are in the live chart in Nestle India. As I was mentioning, we're in kind of a sideways basing right now. And it's a little wide. Maybe we narrow it down a little bit. But basically, if we can break out of this, I would not be opposed to possibly buying, not the breakout itself. I usually wait for a breakout, the retest, and then trade. So if that becomes the case where we get that breakout and pullback, got a couple possible targets here to the upside. I would change my, whoops, that's not what I wanted to move. I wanted to move this. There we are. And target number 1, target number 2, actually change a little bit here. And it's not exact, but it's pretty close. And basically what I would look for then, if that's the case where we just get that breakout, you also want to move the stop up. But you place this where, again, you wait for the close outside of the range, the pullback. And honestly, I might even tighten this a little bit as well for the zone. Not that, sorry, I keep moving the wrong piece here. There it is. And about 22,100 with the stop loss down below. So if we get, again, a close above this little basing that we've been getting, get a retest of this 22,099 to 21,637, you buy the retest targeting now 23,242 and 23,932. So that's an alternative opportunity for Nestle India in case we don't pull back all the way to that demand zone, which is possible, obviously, if it's very bullish. So if you got any questions, please email me, as I mentioned at the beginning, brandonwendell.cmt@gmail.com. Hit me up on Twitter, @TraderBdub, or, of course, on YouTube. Please hit the like button and subscribe, as well as get the alerts. That way you can stay in touch with us and it helps us out quite a bit as well. Until next time, trade safe, trade well. Take care, everyone.